CNBC contributor Stephanie Link. Nice to see you again, Stephanie. What are you going for today?
Great to see you. This is just for you, Sarah. This is Target. I actually added it to my portfolio today. New position. We know that back in March they suspended guidance. Today we got the update. The first quarter to date trends mixed. On the positive side, same-store sales north of 7%. Digital, same-store sales up 100%. That's astounding to me. On the negative side, because of mix and investments, gross margins are coming down. Earnings have to be revised down. The mix issue is because they have more apparel versus consumables. I think over time, the mix issue will settle itself out. As we go back to work, as we reopen the economy, and that's not going to be right away, but over time, it'll settle out. So I don't worry so much about that. On the investment side, I like when a company invests for the future, for future growth, to grow customers, to grow and improve technology, to help on the assortment side. So I think all of these things are very positive for the long term. So while earnings are coming down now for this year, we throw them away. Next year, I think they can grow 22%. The stock is trading at 16 times, yields 2.5%. And oh, by the way, the stock is down 18% on the year, and that compares to Walmart, which is up 8%, and Costco, which is up 5%.
I mean, you're outlining a very bullish case, and those online numbers were eye-popping, and so were some of the staples numbers like food, and I do always appreciate when you pick consumer names. Thank you. But why is the stock getting hit so hard? I mean, what went wrong? Was it in the communication? I heard Jim Cramer earlier analyze sort of the narrative that Brian Cornell was laying out and you know, not being as bullish, I guess, as he could as far as the future of retail and where Target stands.
Well, I think it's a challenging environment, and they have a big apparel mix, and so they have to write that down, and that's not good news for sure. But I think the reason the stock is down is because estimates are coming down, and I actually thought when it was down 5% in pre-market, I thought that was a way overdone, again, because I do think over time, as we settle out, as the economy normalizes, it's not going to be next quarter or the quarter thereafter, but as we normalize, then the mix issue, they're continuing to heavily invest so that their assortment is better going forward, so that their technology is better going forward, and they could maybe balance between consumables and apparel. So numbers coming down is never a good thing, but as an investor that I wasn't involved in the stock, I'm using the opportunity to pull it back on the pullback to be adding to it, especially since it's lagged its peers so dramatically year to date. I think the risk reward is really great.